North American trade is shifting as Canada and Mexico forge a new partnership. For decades, their economic ties revolved around the United States, but new U.S. tariffs have forced both countries to rethink their strategies. Instead of relying solely on the U.S., Canada and Mexico are building a direct alliance to protect their economies. The U.S. remains their largest trading partner, but reducing dependence is now a priority. Like diversifying a financial portfolio, they're creating a Plan B, strengthening their own supply chains and increasing direct trade. Leaders in Ottawa and Mexico City recognize their shared interests and the ripple effects of U.S. policy. By collaborating, they present a unified front through government meetings, business forums, and joint investments. The goal: a resilient North American trade network, less vulnerable to U.S. political shifts. For years, Canadian goods to Mexico often passed through the U.S., but tariffs and delays have made that route riskier. Now, they're exploring direct shipping lanes and efficient rail connections, bypassing the U.S. as a middleman. This isn't just defensive, it's a forward-thinking strategy for long-term prosperity. By investing in new infrastructure and direct trade, Canada and Mexico are building a foundation that doesn't rely on decisions made in Washington. Their partnership is about creating options and ensuring economic stability. It's a proactive response to an unpredictable global landscape. Together, they're shaping a new era for North American trade. The Canada-Mexico partnership is focused on building direct trade routes that avoid the U.S. Maritime shipping is key. Imagine a direct sea lane from Vancouver to Manzanillo, moving goods without U.S. tariffs or inspections. Mexican products can travel north just as easily, creating a secure, predictable supply chain. Energy is another focus. Canada's LNG could be shipped directly to Mexico, bypassing the U.S. pipeline network. This strengthens energy security for both nations. Improved rail and road connections, plus investments in logistics and technology, make these routes efficient and cost-effective. The aim is to make direct trade the logical choice for businesses. Avoiding U.S. customs isn't just about tariffs. It's about reducing uncertainty and risk. Predictable supply chains help companies manage inventory, meet deadlines, and control costs. By coordinating systems and digitizing processes, Canada and Mexico offer businesses a stable environment. These new routes put control of trade back in their own hands. It's a bold move to ensure smooth trade, no matter what happens in U.S. politics. Canada and Mexico are taking charge of their economic destiny. Canadian pension funds are powering this new partnership. These massive funds seek stable, long-term investments and see huge potential in Mexico. They're not after quick profits but steady growth, making them ideal for funding major infrastructure projects. From ports to pipelines, Canadian capital is fueling the trade revolution. Mexico's young population, strong manufacturing, and strategic location make it attractive for investment. As global supply chains shift toward North America, Canadian funds are investing in Mexico's future, and their own. Their investments create jobs in Mexico and returns for Canadian retirees. Beyond money, these funds bring expertise in managing large-scale projects and assessing risks. When Canadian pension funds invest, it signals credibility and attracts more global capital. This creates a positive cycle of growth and development. The partnership is mutually beneficial, strengthening both economies. Canadian investment is building the very trade corridors that will unite the two countries. It's a vote of confidence in Mexico's future and North America's economic integration. Together, they're setting the stage for long-term prosperity. Canada and Mexico's strategy unfolds in 3 stages. Short-term, tackle immediate challenges from U.S. tariffs by rerouting shipments and finding alternative suppliers. Medium-term, invest in new infrastructure, ports, rail, and formal supply chain agreements to build independence. Long-term, establish efficient direct trade routes and energy links, creating a robust North American trade bloc. The ultimate goal is a balanced partnership where all 3 countries, Canada, Mexico, and the U.S., operate as equals. This phased approach provides immediate relief, builds momentum, and keeps the partnership focused. It's about stabilizing now, building for tomorrow, and aiming for a future where North American trade is resilient and diversified. The strategy is realistic. Rebuilding trade patterns takes time. Each stage supports the next, ensuring progress and political support. Canada and Mexico are pacing themselves for a marathon, not a sprint. Their vision, a stronger, more independent North American economy. For this plan to succeed, investor confidence is crucial. Investors need certainty, clear rules, stable policies, and transparent plans. They want to see blueprints, timelines, and regulatory approvals before committing capital. Governments must provide detailed, consistent information to build trust and reduce risk. Risk mitigation is key. Political, regulatory, and operational risks must be addressed. Strong legal frameworks and public support are essential for major projects. A stable environment attracts global investment and ensures projects get off the ground. Early involvement of Canadian pension funds is promising, but broader private sector buy-in is needed. Concrete actions and clear communication from both governments will build investor trust. The true test of this alliance is its ability to maintain confidence and deliver results. Stability and clarity are the foundation of this new economic partnership. July 1, 2026 marks a pivotal review of the US-Mexico-Canada agreement. All three countries must decide whether to extend the deal for another 16 years. This review introduces uncertainty. Future US administrations could demand changes or reintroduce tariffs. For Canada and Mexico, the deadline adds urgency to strengthen their bilateral ties and diversify trade. By building direct links now, they improve their bargaining position for the review. The looming date motivates faster action on infrastructure and supply chains. A successful review would reaffirm regional stability. A contentious one could spark new uncertainty. Canada and Mexico are preparing for both scenarios, strengthening their partnership to weather any outcome. The 2026 review is a catalyst, accelerating the changes needed for a resilient North American trade network. Their proactive approach aims to secure prosperity, no matter what the future holds. Infrastructure is the backbone of this trade revolution. Upgrading ports, deeper channels, faster cranes, expanded storage, makes direct shipping more efficient. Pipelines and LNG terminals provide new energy links, giving Canada a non-US market and Mexico a secure supply. These projects create a long-term symbiotic energy relationship. Harmonizing regulations and digitizing customs procedures are just as vital. A shared digital platform allows pre-clearance of shipments, eliminating delays and redundant inspections. The result: smoother, cheaper, and faster trade between Canada and Mexico. Businesses lower costs, consumers get more choices, and both economies grow stronger. This is about more than reacting to tariffs. It's building a modern, efficient economic engine. The improvements benefit everyone, making North American trade more resilient. It's a long-term investment in shared prosperity. Canada and Mexico are setting a new standard for cross-border cooperation. The future of trade is being built, one port, pipeline, and digital handshake at a time. North America faces a choice: tariffs and protectionism, or cooperation and rule of law. Tariffs may offer short-term protection, but they raise prices, invite retaliation, and create uncertainty. This path leads to conflict and slower growth. Canada and Mexico are choosing cooperation, building bridges, not walls. By following clear rules, they create a stable environment for business and investment. Their partnership is a model of open markets and mutual respect. Instead of retreating, they're investing in infrastructure and harmonizing regulations. The best response to protectionism is more cooperation, not more barriers. The future depends on stable agreements and long-term planning. The choice is clear: trade wars and anxiety, or shared prosperity through cooperation. Canada and Mexico are betting on the future and inviting the US to join them on the path to sustainable growth.